Nigeria's economic landscape is currently a mixed bag. While recent developments are suggesting a positive trajectory, some underlying challenges seem to persist. And on the bright side, Nigeria's external reserves have exhibited a promising trend. And according to data from the Central Bank of Nigeria, the reserves have grown by 2.83% year to date, reaching $34.11 billion as of March 7, 2024. However, a recent report from the National Bureau of Statistics paints a different picture. The NBS reported a trade deficit of 1.4 trillion naira in the fourth quarter of 2023, and this suggests that the value of Nigeria's imports exceeded its exports during that period, raising concerns about potential current account imbalances and pressure on the naira. This morning, we are joined by Ayodeji Ebo, MD, Chief Business Officer. That is Ayodeji Ebo, who is the Managing Director and Chief Business Officer, Optimus by Afrinvest. Thank you so much for joining us on the show.
Yeah, good morning, and it's great to be here.
Okay, so I'd like to find out from you, isn't it concerning that amid a fallen naira, the country also recorded a trade deficit of about 1.4 trillion naira in the fourth quarter of 2023?
Okay, yeah, thanks. It's all concerning for everyone with the continuous depreciation of the naira. Yes, in the last 1 week, there's been a bit of stability. But speaking to the data, if you look at the fourth quarter of last year, you would see, based on what you have said, the trade deficit of about 1.4 trillion. And one of the major reasons that's responsible for this is that we observed that there was significant increase in importation of vehicles, airplanes, and machineries within that period. When you check it on a quarter-on-quarter basis, was almost like about 60-70% increase. So when you look at the export, we export more of crude, and then mostly our oil production stayed at an average of 1.35 million barrels per day within that quarter. So that did not increase the export leg that should have compensated for the major increase that we observed in the import of machineries, motor vehicles, and airplanes.
But then if we look at quarter 3 of 2023, Nigeria had a trade surplus of 1.8 trillion naira, meaning that the value of the country's exports, which was about 10.35 trillion naira, was higher than imports of about 9.04 trillion naira. But then, just as you said, we look at quarter 4 2023, the trajectory changed, with Nigeria's trade recording a deficit as the value of imports outweighed exports. So what other factors would you consider as responsible for this that you think we need to be looking at as we move forward?
Okay, thanks. So I think that when you look at import-export, when we have trade surplus, it means that we export more than we import. And when you look at the ratio in Q3 2024, we had a ratio of export was 53%, while import was 47% of total trades. However, it flipped around in Q4, where we had imports was about 53% and export was about 47%. And that was responsible for the negative or the deficit, trade deficit that we had. The major reason I would reemphasize is that oil production that boosted, it was oil production that improved the earnings we had in our exports. Beyond the devaluation that increased our naira revenue or naira value of export, the oil production improved in that Q3 from an average of almost 1.15, 1.2 to an average of 1.35 million barrels per day. However, in Q4, within that period, oil production stayed at that current level of 1.35 million barrels per day. But it was interesting to see that there was a major surge in the imports of motor vehicles, airplanes, and machineries into the country within that period, which means that would have been responsible for a lot of the FX demand that we also observed within that quarter, apart from oil. So it was really a major need because looking at the data, looking at it in the past 4 or 5 quarters, that Q4 quarter was really very massive, and it stood out significantly beyond the imports. When you look at oil and oil products, still accounts for import of oil and oil products, still accounts for about 90% of total imports in Nigeria, then followed by manufacturing, then you also look at agri. So it's that there's a need to see that we continue to improve our export, which is the oil production. If that can go up, to also have impact even on our external reserves.
But then if we continue to say that we may need to keep putting our thoughts or our willingness to continue to export crude oil. Of course, for decades, we have had talks about the Nigerian economy being over-reliant on crude oil exports and the need to diversify. There have been talks about diversification of the Nigerian economy because there are other sectors of the economy that are said to be performing well only if more investments can be channeled towards that line. They might just be able to improve on the Nigerian economy and value, so to speak. So what are the areas, if we are to look away from crude oil now, what are the other areas that you feel Nigeria would need improvements if we are to increase the value of our exports?
Okay, thank you very much. So the first thing is, when you look at agri, which is the second largest, which is about 3.9% on a quarter-on-quarter basis, that also needs to be worked on. And when you look at what are the major items, sesame seeds, cocoa beans, and soya beans, they account for about 2.9% of total exports, which is about 372 billion. This, I feel, is also like a quick win for the government to work on, to expand. So if we can grow in this quantity here and we can export it, why don't we invest more money in this space, like we invest in oil, to expand this through improved seedlings, support with fertilizers, more training, so that we can export, and also improving that process of export. It's also very important. The second largest or the third largest item is manufacturing products. We know, yes, we will not be able to produce a lot of very sophisticated products within the country, but it's also good to look at, even if it's the repairs that we begin to also build ourselves in. Then I think it's also interesting to note that Nigeria spent about 5.4 billion naira on importation of salt for human consumption from Namibia in Q4 2023. So you now wonder, is it that we can't produce salt in sufficient quantity that we have to import it? This is just for 1 quarter. So by the time you analyze that, that's almost 20 billion naira we are spending on salt.
Okay.
That I feel we have enough in Nigeria. So these are some of the things that, if we identify this, what are the things Nigerians are spending money on? Granite from China was about 1.5 billion in last quarter. So those are some of the things. Is it that we can't produce them enough? And if we can't, can we channel more effort in improving this, such that we'll be able to create more jobs? Because what we are doing is we are creating jobs abroad and we are suffering it here, and that is also impacting on insecurity. So there's a need for us to focus on these quick wins.
Okay, let's also look at this. Nigeria's external reserves recorded 2.83% year-to-date accretion following inflows from foreign capital and remittances. So considering the fact that it's just about 2 weeks, or 2 months rather, annual week, do you think that is good enough?
No, I think the CBN don't have full control of what the external reserves is being managed by the CBN. But where the fiscal authorities, the role they play is the ability to be able to bring funding into the reserves. So what the average, it's always like a 6-month average when you see the numbers that you see. And that's why if there's any major increase, you don't see that impact until after a while. So I feel that, yes, there's an improvement. That means with all the increase in volume in the NAFEM market, that's the Nigerian uh, foreign exchange market. It means that inflow has improved, and we can trace that to improvement in oil production, which has increased to about 1.4 million barrels per day. Yes, so as of January. So if that can be sustained, and we ramp up our production back to the levels of 1.6, 1.7 million barrels per day, that creates steady FX while we continue to work on foreign portfolio investments or foreign direct investment into the country. And we believe that as a result of that, there will be improvements in liquidity and it will create stability, which will complement some of the current or new policies that the government have introduced around the
So then let's quickly recall JP Morgan's shock review, which puts Nigeria's FX reserves at about $3 billion. But then we hear the CBN insisting that it's not the case. So looking at the activities in the market and CBN's intervention so far, does it seem to you that it has up to what it claims to have? Or should we, let me put it this way, does Nigeria have enough reserve to support the Naira?
Okay, thank you. Yes, we may not have, I think the reserves is encumbered, which means that, yes, the value of the $34 billion, there may be some of it that is encumbered, which is also constraining the CBN with the intervention. So I don't believe that all the current amount is totally unencumbered, because that would have also increased the level of the intervention we'll be getting from the CBN. But I don't want to put this blame on the CBN. CBN is serving like the portfolio managers. So the fiscal authority has a major role to also play to complement the efforts of the CBN, which is through reducing oil theft and increasing production. And once we can increase oil production, and we also raise more euro bonds, and over time, with some of these policies, the new policies that have been introduced, will create a bit of more stability. And once the foreign investors see stability, consistency in our policies, then I believe that would also create a lot of more inflow and appreciation of the Naira in the medium to long term.
Cool. Ayodeji, MD, Chief Business Officer, Optimus by Afrinvest. Thank you so much for sharing your thoughts with us.
Thanks for having me.